President Ramaphosa has announced in the establishment of a new centralized ownership model for state-owned enterprises in the form of a holding company for all state-owned enterprises following the dissolving of the Department of Public Enterprises at the start of the 7th administration. Ramaphosa says he intends for this to be the springboard through which a sovereign wealth fund will be established by funding the profits of well-performing state-owned enterprises towards capitalizing the intended sovereign wealth fund. Political economist Professor Patrick Bond joins me to unpack this further. Prof, thank you so much for joining me. Really appreciate it. Before we get into the mechanics, maybe let's just settle the principle first. Does a country as deeply indebted as ours need a sovereign wealth fund at the moment?
Well, indeed, great to be with you, Oliver, and that's why we need one, because our debt reflects that the past generations have run up bills that present and future generations have to pay down. And it makes a lot of sense for a resource-based economy. Don't forget, we had half the world's gold underneath us here to be able to take resources that are timeless, that future generations should inherit. Now, although currently it's going to be a state-owned enterprises profit-based fund, pretty much all of the successful ones, Norway and the Gulf region, have been using their resource inflows to invest partly to cover current expenditure. And I'm pretty sure that's the way we're going to have to go. Right now we're in the sort of Zimbabwe style, which is hoping that the SOEs make a profit. But as you're sort of hinting at, no, they don't. They take a loss.
Yeah, I mean, they've given us what's more than about negative 4% return over the last decade. They certainly don't make money. They, in fact, require money to run, as the last decade and a half has proven to us. Why can't we use other models, pension fund money?
Well, we should, and one reason is that the resources underground, not just our pensions, we have a huge fund, obviously, the Public Investment Corporation. It's been run so terribly with lots of corruption. We've got a gold and foreign exchange fund of about 500 billion, actually minus 150 billion that was taken out by Finance Minister Enoch Godongwana in this year's budget, just to pay down the current spending and the debt servicing. So yes, we have big funds, but don't forget that there's about $10 trillion, that's about, 185 billion rand underneath South African soil. So the sovereign wealth, the societies and the state's management of that wealth going into future generations should be captured. And the models, as I say, Norway at $1.6 trillion, probably the most effective. They do what we environmental economists like to say is the Hartwick rule. We follow a rule in which if you take the non-renewable resources out, you're depleting your natural capital, well, you should invest the proceeds in human capital, in education, or in productive capital. And South Africa, over the last, say, 140 years in this city, going back further in Kimberley, looking at all of the mineral wealth, we certainly haven't done that, right? We had half the world's gold at one point underneath, and it was frittered away. So it is desperately important to have a wide-ranging sovereign wealth fund.
Yeah, I mean, if Norway were to cash out on its sovereign wealth fund, all of its citizens would be a dollar millionaire, given how successful that has been. But sovereign wealth funds, as we've seen with the Saudis, have the potential to be deeply corrupted and to be corruptible. You point to the PIC and its woes, despite the fact that they've given us above inflation returns consistently for a good number of years. It proves that if you don't change South Africa's political culture, you could have a corrupted sovereign wealth fund.
Oh, that's always true. The other angle which the PIC took advantage of was a very high Johannesburg Stock Exchange increase. We're about third highest in the world using the Buffett indicator. That is the capitalization, how much is the JSE worth versus our GDP. So it's an incredibly bubbly, overvalued JSE. And the main reason is that one of the big investors just down the road, your competitors at News 24, Naspers, they took a lot of money out and they put it into a Chinese company, Tencent, and that then came back and boosted the JSE. And a few other cases of that sort don't really reflect our underlying economy, because what we really want is more or less what you're saying. Where do you invest such funds? And you want to invest in productive capital. And our private sector is on a sort of capital strike. The fixed investment rate is terribly low. It really only comes up when there's credit in the economy, the first 5 years of the 2000s, or when the commodity supercycle, that is, prices of our main exports of coal, of platinum group metals, of gold, of iron ore, and manganese, and a few others. As those go up, then we would get revenues. And the big question, where should we reinvest? And I think with an NHI on the agenda, with universal basic income grant, these are sort of tokenistic at this point.
And free education to be funded as well.
Well, now you're speaking to my portfolio, and I'm biased, but yes, the tertiary education, that the fees must fall, the students won, at about 40 billion rand extra a year that they put onto the spending has to be continually funded. And yeah, I'd say that's a very, very good investment. It's
just to
so
go
it's not
back
a
to
spending, it's
2000,
investment. Yeah.
just to go back to 2021 till about the middle of 2022, the commodities boom that really saw for the first time in over a decade a surplus in the South African fiscal outlook. That money could have been used to set up a fund, however small it may be, but it clearly wasn't, which demonstrates a lack of real political appetite, I would say.
I think you're right, Oliver, in a way that, let's be frank, so much of that money went abroad. Why? Because it was foreign companies, foreign mining houses. And we used to have the biggest in Africa here in Johannesburg, just down the road. It was Anglo Gold, Anglo Gold Ashanti, then it was the Anglo-American Corporation. And now all of those lads have gone to London and they've taken the historic apartheid wealth with them. Until we can find let me use the term, resource nationalist politics, the political hunger to reinvest. But even President Ramaphosa, you know, at his peak in Shanduka, he was acting for lawmen to take money out of the country to Bermuda. And so we don't really have a politics yet. And I don't think we will with the DA in power. They're all for liberalizing exchange controls. Just don't forget that the finance minister, Godongwana, said we made a grave mistake just the day after his budget speech this year by liberalizing trillions of rand in pension funds to be invested abroad. So tightening exchange controls, I think, would be job one for a patriotic government.
Yeah. Should we not maybe just wait for the promised commercialization of oil and gas commodity reserves that we have in the Orange Basin? Angola, Mozambique, as well as Namibia has already de-risked a great deal of that exploration exercise going on. The environmentalists are holding a lot of the commercialization of that back, but there are means of regularizing that. Should we not just wait for that and just use our oil and gas money to form a sovereign wealth fund?
Well, I've been in a debate in the courts, actually, with Azar Jamin, a great economist, about exactly what the costs and the benefits are. And Mozambique's really disappointed by exactly those fields. Partly Sasol plundered them in the middle of the continent, the country, to pull gas here to Gauteng. But then in the north, there's a blood methane, right? It's the natural gas offshore Cabo Delgado, and we had 1,200 of our own troops there to defend Total Energies, ExxonMobil. Mozambique's getting nothing, and they won't for many years. So I don't think that's a model, and Namibia is too early. Don't forget, Total Energies has just pulled out of its Brulpadda, the big find offshore, and whether the Russians come in to help in Mosgas, the Mossel Bay, those are big questions. I think the cost, because of the fossil fuel use of hydrocarbons, not for useful things like lubricants or tarmac or pharmaceutical products or plastics. Those are useful because we don't burn them. Instead, what I suspect Total and Johnny Copeland, a local investor, and Shell will want to do is burn the gas. And then we've got a huge climate debt to reckon with at about $1,050 per ton of cost. That is the future climate catastrophe that comes from using that gas. I'd say leave it below. So I'm one of those environmentalists who's not wanting to use gas to burn. Maybe later we should use it for all these other useful things hydrocarbons bring us. I
mean, yeah, carbon capturing technology will be massively improved by then. But just maybe to exhaust this point, going back to my earlier question, if there's any little bit of money left to be spent or to be found to be spent somewhere, should it not rather be spent on closing the budget deficit and the debt burden that we have, given that a great deal of our debt is denominated in dollars? Should we not focus on that rather, which will give us breathing room in the future, rather than spending on investments, which, by the way, will take a long while to give us returns, substantial returns, that is.
I'm with you part of the way, Oliver, because if we do have a current account deficit, which means that the revenues that we're getting from our trade, which is in surplus, are outweighed by the profits, the interests, the dividends that we pay to foreign investors, I think it's overdue to put on exchange controls to keep that forex. And you're right, we have a very high foreign debt, $165 billion, although that's also private and SOE debt. But I think the crucial thing is whether we can recalculate in our mind's eye that the revenues from not just SOEs, if there are any, but from all of that natural resources, $10 trillion. If you think into the future, it's vast. And that we should save for future generations. And that's why a sovereign wealth fund would be a terrific asset, the way it is for Norway. And maybe in Norway, they're going to use some of that 1.6 trillion to pay their climate debt too, because that oil that gave it to us has also created the kinds of crises that we saw in Cape Town last week or Durban in 2022. Those are the debates that society needs to have. What do we do?
And I do want to have you back to have a debate about whether or not we should commercialize the wealth of hydrocarbon molecules that we have on our shores, and whether or not that could be the economic liberator South Africa needs. But thanks a lot for joining us, Prof Bond. Really do appreciate it. Always fantastic.
Thank you, Oliver. Great to talk as always.